Interesting day. It promises to be an interesting day. The market's been up last 3 or 4 straight sessions. Will we finally start to see some profit booking? I mean, technicians tell us that we're at the upper end of the range, so as to speak. And around here, maybe things should start to cool off. If it doesn't, I mean, then it becomes a whole new ball game. Overnight cues were not negative. Dollar was lower. US risk assets, equities, etc. were higher, which actually is a positive backdrop for emerging market equities. But for now, it's an 18-19 point. Absolutely understandable the way markets have been moving, are moving after what they've done over the last few trading sessions. I'll come back with some specific global setups to watch out for in just a bit. But let me get in my colleague Ekta, who's with me. Ekta, morning.
Hi, Prashant. Yes, absolutely. So I think we've taken more of the Asian cues ahead rather than the US cues and the fourth consecutive gain that we saw for the Dow. So currently the mid-cap index is managing to, however, outperform. So up around 0.5% currently for the mid-cap index. But for the Nifty, which is down around 18 odd points, is turning out to be a little bit of a consolidatory session on the downside. Just want to point out, even the Bank Nifty is sulking today. So remember that yesterday we saw a surge in the Bank Nifty by the last hour of trade, but that hasn't culminated in terms of any sort of follow-on today. So down around 0.5% there. And obviously a couple of those key Bank Nifty constituents, IndusInd Bank is reacting on the downside. In fact, low point of the day post its numbers, post the commentary rather from the management in the analyst call, as well as the brokerage notes. So that stock is reacting on the downside. Bandhan Bank coming out with numbers today. That stock is higher. And Yes Bank post that board meet outcome. Still don't know who probably would be leading the bank going forward. So that stock is just about consolidating at this point in time. Lots to talk about, considering that TCS is going to be delivering its numbers post markets today as well. And then we have Infosys coming out tomorrow. In fact, we have Karnataka Bank coming out with numbers tomorrow as well. So a lot coming in from the financial space in terms of news.
Absolutely. Ekta, and we'll get into those straight away in just a bit. But I'll just take a minute and a half to talk about some big global setups. And the reason I'm doing this is because across the board, we've seen decent rallies. I mean, you look at the US market, you look at oil prices, you look at, even big beaten down markets like the Chinese markets. I mean, all have had decent rallies over the last 1.5, 2 weeks or so. And maybe, in the next couple of days, we may start to see some profit booking coming in. But the one common thread, and I'm looking at 3 things: S&P 500, WTI oil, and the Shanghai Composite. The one common thread is the fact that they all look, better for the wear. I mean, they look constructive, so as to speak, even if around here, because of some profit taking, etc., starts to creep in. Let's start with the S&P 500. Remember, the rally off the lows has been pretty impressive over the last 2 weeks or so. We were when we started January, the S&P 500 had touched for the second time the 200-week moving average in the last couple of years. And the 200-week moving average is the really big one. It topped out at the 55-week moving average, and it kissed the 200-week moving average, and it was looking like it will keep going. It was a textbook touch of that important level, and from there, we've seen this rally over the last 2 weeks or so. Oftentimes it so happens that once you touch a very important level, the rally which ensues is pretty strong, but then the road to recovery is rocky. The S&P 500, the US markets, the equity markets have gained now for the last 3 or 4 trading sessions straight. And it's possible that around here we might start to see some amount of profit taking coming in. It is even possible the profit taking is deeper. But the big Lakshman Rekha, which I mentioned, which I called the 200-week moving average earlier as well, remains intact. It's a textbook case, a touch, and then the market sort of taking off. So, the point I'm making is it's looking constructive. Let's move on to oil. Oil prices are up $20% from the recent lows in the last 1 month or so. And now it finally looks like the weekly momentum is turning up from very, very unsold levels. You might say that, well, a big oil importer like India gets hurt. Obviously, it's not great news for a big importer. But the fact is, oil starting to move up isn't bad news for risk assets. Risk assets, including oil, including equities, everything started to come lower together on global growth concerns. If oil is moving up, it may actually provide a bit of help for equities as well. I'm not just talking about India, but global equities. So that is oil for you. Let's move on. Let's move on to the Chinese markets. We saw a bullish outside day exactly at the lows on the 4th of January. We saw a similar setup back in October, middle of October of 2018. And, indications are that maybe over the next couple of months, things build up in a better way. There are some levels, etc. I'm not going into details. Around 2700, 2750 are potential resistance levels. And past that, maybe things become much clearer. But we saw a bullish outside day, and sometimes these things work. So just leaving you with that thought, even though we may see some correction, some corrective action because of the rally we've had across asset classes over the last 2 weeks, the setups structurally underlying look pretty okay, pretty all right. Ekta.
Okay, yes, absolutely, Prashant. And in fact, that global risk on has resulted in the MSCI Asia ex-Japan rallying around 3.5% this week. But compare that to MSCI India, that's just about flat. So there's a marginal bit of an underperformance which has come in for the Indian equities as compared to the MSCI Asia ex-Japan index. But let's get talking in terms of a couple of technicals for our market then. We have Mitesh Mitesh Thakkar joining in for a technical check. Mitesh, hi, over to you then. What would you be recommending in terms of an index strategy as well as stocks, and what are you making of this overall trend that we're seeing today?
Good morning, Ekta. Good morning, Prashant. I think the index is now contracting, the Nifty at least. I would say that the counters are close to about 10,900 to about 10,720, 25 on the downside. So in that sense, I think there's no rational bias. One can employ range trading strategies. Yesterday afternoon, we had that big decline which came to about 10,750. That actually is the buying zone. Keep a stop below 10,720, closer to about 10,850, 900, try to take profit. So that kind of strategies can be deployed. I think this range-bound movement might continue for another 2-3 sessions before we see some kind of a directional bias coming in, because the intraday indicators also have turned flat. So not much of a bias there. The Bank Nifty could be an interesting index to trade if it starts getting past 27,800. Otherwise, it will do a range of 27,300 to about 27,750 on the upside. So in that sense, I think both the indices might not offer you a good trade in the coming few days, but on lower levels, on intraday dips, let's say 1% or so, I would be an aggressive buyer with a 30-point stop on the Nifty and about 100-point stop on the Bank Nifty.
And stocks?
Yeah. So I have two calls. Torrent Pharma, I think, is showing good momentum. If it starts getting past 1870, buy that. Keep a stop at 1849. Look for targets of 1920. And Colgate Palmolive is a buy with a stop at 1295 for targets of 1355.
Okay, well, we have a Twitter query now for you, Mitesh. Pranav has 400 shares of Yes Bank, bought at 340. Wants to know the way forward on that.
So I think, the stock has already corrected a bit, and now is what I would suggest is that now the volatility which you're seeing between levels of 150, 160 on the downside to about 185, 195 on the upside is showing some kind of a bottoming formation on the longer term chart. So we are still consolidating, we're not yet reverses yet. The idea should be to accumulate more. The stock is very at an important support level of 150, 160. I think anything between this 170, 150 range, I would suggest if you can add more, that will allow him to get his average price down, keep the stock below 140. And I think whenever the stock, and actually I do expect the stock to go to about levels of 250, possibly 280 over the next 2 quarters. So I think around those levels, he can then exit very close to his cost.
All right. Thanks very much. Appreciate you joining in with your trades, market view and advice as far as viewer questions are concerned. We'll have more technical trades in a bit. IndusInd Bank is the top loser on the Nifty. I mean, the stock was weak immediately post the numbers yesterday, but then it turned out to be one of the decent private sector gainers by close yesterday. Brokerages have cut earnings expectations and target prices post the third quarter results. Abhishek is here with those details. Abhishek.
Well, Prashant, brokerages mentioned that, the loan growth momentum for IndusInd remains really strong. And at 34.7% is one of the highest loan growth seen in last few years for IndusInd Bank. However, slippages remain elevated and provision coverage ratio has declined massively. So if you look at the slippages, they came in at 806 crore. That compares to about 419 crore in the previous quarter. And provision coverage ratio actually declined to 48% versus 56% quarter on quarter. The net interest margin has been on a declining trend, right from 4% to about 3.83%, and that's on the back of the fact that NII growth for the last 5 quarters has been lagging behind the loan growth. So they have decreased earning estimates for FY19 by 4 to 6%, while also by 2 to 6% for FY20. So if you look at brokerages like HSBC and IDFC Securities, they have cut down the target price, and IDFC Securities has cut down the target price by as high as 14%, However, all the brokerages remain positive on the stock given the fact that valuations are at comfortable level and they have a target price ranging from 1900 to 2000 rupees per share. Back to you.
Okay, Abhishek, just a quick follow-up. What's the key concern when it comes to asset quality?
The slippages actually increased quarter on quarter, 806 crore versus 419 crore, and that is X of ILNFS. So ILNFS remains an overhang in terms of what is the total provision that they have to do. So they'll have to make a further provisioning in this quarter. And as per RBI's norms, if you have a non-funded exposure and if it goes bad, you have to make 100% provision coverage. And what we understand is the total exposure is of 3,000 crores.
Okay. All right, Abhishek. Thanks very much for that. So that's probably why you're seeing the stock under pressure, that maybe profits could be under pressure because of higher provisions in coming quarters. But on to some opinion then, coming in on the resolution of distressed power assets under the Samadhan scheme. SBI MD Anshula Kant spoke to us earlier in the day. She says that the resolution of power assets is not very encouraging as it is tough to get consensus amongst lenders. However, she's hopeful of around 4 to 5 power sector loans getting resolved, which would elevate 12,000 crores worth of NPAs.
The update is not very encouraging, I would say. It is the same 3 plants which we had originally identified, and those we are hopeful will likely go through. There are a couple more we are still working on. It is, the problem is that there are so many lenders and there are so many different interests, which is actually creating the problem of consensus, getting everybody to say yes. That is an issue. 4 also goes through, at least for SBI, it will mean more than 12,000 crores reduction in NPAs. A couple of them are more or less done, but again, there are a lot of CPs that have to be complied with before the deals actually go through. We are hopeful that at least, a few of them will go through in this quarter.
I have one question about this fundraising issue. I've been told that you have appointed bankers. Could you give some update on that?
Really, I wouldn't like to talk about that at this.
Okay, but is it a debt raising or an equity raising? That's all we wanted to know.
Equity raising.